Good morning, everyone. I hope you're doing well. Welcome to this daily review of the 18th of April 2024. It's Thursday today, and we saw rather interesting deliveries so far to begin the week. We have seen expectations so far be met, and now it's just a matter of time to see whether or not the continuation scenarios that I outlined prior will play out. So during this review, I will basically restate what I'm looking for in the markets going into the end of this week. Before I do so, I just want to share with you that everything is okay. During Tuesday's review, I of course shared that everything was a bit chaotic where I'm living. I live in Dubai, and the weather here was just absolutely insane. I had family members coming over, so it was a struggle to get them off the airport, and that's also why I was or sounded kind of stressed within the review. But we got everything over all right. Everyone is all good and healthy, so thank you for the kind messages through my DMs. So, with that said, let us now dive into the review. Alright, first of all, let's take a look at the economic calendar for today. As you can see, we have high impact news at 8:30 unemployment claims, and we have medium impact news at 10 a.m. for the dollar. Tomorrow on Friday, we have only high impact news for the pound during the London session. If we take a look at the daily chart of dollar, what we can see is that dollar has indeed retraced after trading into this premium CB. Dollar is currently trading inside of this daily BC right here, and I'm monitoring to see whether or not the dollar will form a low here to continue higher to draw towards this buy side liquidity and towards the 2023 high. What would make me neutral on the dollar for the near term would be the following. If the dollar would displace below this BC and we would see it trade into this gap right here, I would anticipate choppy delivery to occur. The reason why I want to see a low form right here on the dollar is due to the following. If you take a look at the left side of this curve of this market maker buy model, you can see the following. You can see that a retracement took place on the left side of the curve after we expanded lower. We retraced and expanded lower, meaning I never want to see the dollar trade below this candle's low anymore right here. I want to see from this high to this low function as support on price. If it does not, then we need to be cautious for the dollar. And notice that this lines up with a BC right here that broke through that price range. But there's even something more significant, and that's the following. If you take a look at this CB right here, that should also be extended on your chart. But what about this down close candle, this bearish breaker that we utilized back in TOTK in November to call this whole expansion lower? Yep, that should also be on your chart. We have a lot of confluences right here supporting the idea that a low should form in this area. If it does not, then it's a cause for concern. For our chart dollar, what we can see is that I've annotated this down close candle and I've extended it to the right. I will be utilizing this down close candle to measure order flow on the dollar. If the dollar displaces above this down close candle, I anticipate speed and velocity to the upside and drawing towards this buy side liquidity. This down close candle has to act as support on price once broken in order for this to be confirmed. We have this CB right here that's also an important reference points. So the moment that we see displacement above those price ranges, we can anticipate them to function as support to send the dollar higher. If they do not function as support, but instead continue to act as resistance on price, then the dollar is likely to trade deeper into this daily BC's price range. Again, the invalidation is at this arrow. Notice that the invalidation level of this arrow is inside of a 4-hour BC right here. Daily chart Euro, as you can see, Euro has retraced into the CB that I outlined during the weekend preview. It is currently trading inside of this inversion for value gap right here. This BC extended to the right. As long as Euro stays below this arrow right here, I'm anticipating that we're going to see continuation lower, drawing towards sell side liquidity below this row and deeper into this BC. The moment that Euro displaces above this candle right here, I would be cautious when it comes to having a strong one-sided bias for Euro. The reason why that is the case is due to the following. We have an inversion value gap right here. We have a CB right here. We have an important low right here. And all those things line up with one another. So that's what I'm doing. I'm stacking confluences to basically give me an idea of what the market should do and what it shouldn't do. And by doing so, I'm making my analysis about the marketplace very objective. And that's a key takeaway for you by watching this review. What you need to do is you need to be able to gauge order flow by looking on the left side of the curve and see what levels, what specific price levels should never be displaced above or below to measure order flow into your expected direction. So again, as long as euro stays inside this CB, I'm monitoring to see whether or not we're going to see a high of weak form inside that CB to continue lower, drawing towards sell side liquidity. This of course can only occur when the door shows signs of continuing higher. Hourly euro chart, what we can see on the hourly euro chart is that we are potentially seeing my market structure shift pattern play out right here. The Zeussy market structure shift pattern is of course the following, where we see a BC lows form inside that BC. It is often of course one low, but in this case we see multiple lows right here. What we can now anticipate is the moment that we see displacement below this low, that the sell program is confirmed, that we can anticipate this to be one market maker sell model, where we see the buy side of the curve and the sell side of the curve. Notice that I'm not trying to capture a top right here, even though we're trading inside of a daily fair value gap. I'm waiting for confirmations inside of that high time frame POI. SMT should be looked out for right here with GU and Dixie, or Dixie I should say. Daily chart Nasdaq, what we can see is that Nasdaq expanded lower yesterday without retracing into this daily CB, into the low of this candle. The reason why this is significant is due to the following. This could potentially be the following, where we see buy side liquidity get engineered below a CB. However, I would not be surprised if we would not see such a deep retracement on the daily chart on Nasdaq and that we would instead see immediate rebounds take place on the Tuesday low right here. This level should be on your chart. You should be monitoring how price reacts off that level. And if we are going to see a daily immediate rebalance, then we can anticipate speed and velocity to the downside towards this sell side liquidity and towards this BC if it gets overzealous. If this is not daily immediate rebalance, meaning the Tuesday low doesn't necessarily act as resistance from price, then we can anticipate Nasdaq to retrace all the way into this CB, and as long as it stays inside that CB and it doesn't displace above this arrow, we're in a sell program. And the reason why we're in a sell program is because we are seeing again the market structure shift pattern right here, where we see a BC low displacement through that low with a CB. As long as that stays intact, I'm anticipating lower prices on the index futures, and specifically on the Nasdaq. Daily chart ES, what we can see is that ES displaced lower, trading below this sell side liquidity, trading into the low of this daily BC, and eventually even displacing outside of it yesterday. Notice that this displacement lower below the Tuesday low did not occur after price traded into this CB, because price didn't. Why didn't it? If you would compare ES to Dixie, to the door index, you will figure out why. However, what this signals to us is the following. Okay, they have left this CB intact so far. Is that required? Is that a potential breakaway gap? Yes. However, what we need to be very careful with is the following. This CB formed inside that inverse value gap, and therefore it can still be retraced into before we distribute lower. So again, I'm monitoring to see how they will treat the Tuesday low right here. If they violate it, I'm anticipating the market to retrace into this CB. If they respect it, I'm anticipating big down close candles on the daily chart into the sell side liquidity. Annotated. And if it gets overzealous, maybe even in the 2024 opening. One thing that I'm not a fan of is how slow this sell side of the curve right here as delivered. For our chart ES, here we can see that daily CB annotated, and as long as ES does not displace above this high, we're in a sell program and I'm anticipating lower prices. If ES would displace above this annotated high with this arrow, then we need to reconsider whether or not this is the high being in. However, until that's the case, I'm anticipating a retracement or not a retracement and distribution lower. As long as that doesn't happen, I'm anticipating lower prices on ES. Yesterday, I shared with you right before PM, I believe around, it was 11:55, I believe. Of course, this timing is for my local time zone because it's a screenshot of my Telegram. But within the forum, I shared that during the PM session, you should study how ES will treat this H4 BC. And I annotated the BC from the 21st of February 2024 that occurred at 2 p.m. I shared with you that this BC should be annotated on your chart, and I want to share with you how the market treated that BC during the session. If we take a look at how the market delivered, we can see that the low of day exactly formed at the low of that BC. If we zoom into that delivery, what could you potentially anticipate inside of that delivery? A market maker buy model, of course, because you see right here, the market opens up, delivers lower, forms a low right here, and then immediately has this long wick to the upside. Inside of that delivery, there's a market maker buy model that plays out, and that's where some of you actually took nice trades, and I'm proud of you. If we take a look at the M1 chart, we have zoomed into that delivery, and we can see this very messy market maker buy model. However, notice the reaction of the low of that H4BC. Look at the body's closing. That right there is algorithmic precision. And if you apply time to that, your mouth will fall open. Because at what time did this low form? Well, you already see the orange lines on my chart, of course, above the time. Our indicator doing its thing. But look at that. During our time of interest, a deep discount relative to that H4BC gets reached, and a low forms smart money reversal, market maker buy model, buy side delivery higher into a premium CB, into another premium CB, and that's just beautiful. Again, study this delivery. There's a lot to be learned from it. And within the Telegram channel, within the mentorship forum, I'm going to share more of these market updates because I feel like they're very valuable. And it's very important to note that I'm not giving any financial advice or anything of that sort. I'm just sharing what I'm looking at. And this is all meant for educational and or entertainment purposes only. And that's the same for the mentorship forum, of course. All the charts that I share are just studying charts, investigation charts. With that, this review comes to an end. I hope that you found it insightful, and I look forward to speaking with you soon during a new lecture of the model series and a new weekend review.